Hey guys, welcome to the Newbie Real Estate Investors of New Jersey podcast. I'm Joey Chan, my partner Jonathan Boyle, and we have a special guest for you guys today. He's the author of One Rental at a Time, Michael Zuber. Hey Michael, welcome to the show.
Joey. Hey Joey, Jonathan, thank you for the invitation. Love podcasts that are aimed at the newbie, trying to help someone. We all start there. And if you can get a couple of first steps in the right direction, it makes it easier to keep going. So I like what you two are doing.
Thank you very much.
It really means a lot.
Thank you. So, Michael, can you tell us, the audience, a little bit about yourself? Why did you write the book?
Yeah. So the reason I wrote One Rental at a Time, I had spent 15 years kind of building a real estate portfolio, after reading Rich Dad, Poor Dad, right? And what I really realized when I left work at 45, financially free, replacing 2 six-figure incomes because of rental houses, I realized that while Rich Dad Poor Dad was the inspiration, it doesn't lay a roadmap. It doesn't tell you real world. It doesn't tell you anything. So what One Rental at a Time is simply the documentation of our 15-year journey, right? From a single house to freedom, through 15 years of crazy markets, right? My market is in California. That means it went crazy from 03 to 08, fell off cliff from 08 to 12, and then it came back. And it came back differently because it not only appreciated, but then multifamily got crazy and stupid expensive. And, there were so many opportunities to make mistakes, which we certainly made, but there were also opportunities to cash in your chips, reposition yourself, be conservative, really follow the mindset of one rental at a time. And I was like, you know what? I'm going to write a book. Really what I said is, I didn't say I was going to write a book, is I'm going to document our story, because I think it's interesting. I think it'll allow me to remember the hard time. And then I gave it to a few people to read. They had some feedback, but all of them said, you got to publish this. You go get a publisher and put it out there. So I'm glad it was received. It's growing in popularity. It's been out a year now. I think, for a self-published author, I think it's almost 5,000 copies now. So it's doing, better than my wildest expectations. So that's nice to see.
Wow, that's pretty awesome.
Yeah, no, it really is. Mike, I just wanted to clarify, I guess, what made you really get started in real estate, and why real estate as that vehicle?
Yeah, so my real estate journey starts on my 30th birthday, and that was when I went into a bookstore and found Rich Dad Poor Dad. But really what caused that journey was I made okay money in my 20s, was making 6 figures by the time I was 30, but I didn't have anything to speak of. And more importantly, I had, I don't know what you would call it, gambled in the stock market and won, only to stay at the stock market too long and lose, right? I lost 6 figures in the stock market. So I was kind of licking my wounds, realized that the stock market's a rigged casino, pretty much like it is today, right? It's funny, right? Because this happened to me in 2001 or 2. And, today we're talking about, 1,000-point swings in the Dow. So that's kind of where I was. I was like, forget this thing. I'm not putting another dollar in the stocks. That's a casino. I don't know the rules. The rules change. So I have to do something, because I was in a career that was commission-based. We have quotas that are 90-day durations. And if you don't hit your quota, you could theoretically be fired, right? You get a warning the first time and you're fired the second time. So that was the world that I lived in. It was very cutthroat, very high energy. It washes you out very quickly. And, you can handle that stress when you're 30. You really can't handle it all that well in your 40s and 50s. So I knew I had to get out. So the quick answer was real estate was my only option. I wasn't going to be a stock trader. I didn't have the intelligence to create a company. I wasn't an athlete. I saw no quick money coming. So I had to try something, in real estate really was the only option. So we jumped in.
Really? Wow.
Wow. That's incredible.
Yeah, I mean, I had a very similar background as yourself. I was a Series 6 and 63 agent. I was a financial planner. So I, went after people in terms of trying to plan for their retirement, even though at the time I was 18, 19, I was nowhere near retirement, and I didn't know anything about retirement, right? The only thing I knew was the products I was selling. That's it. So,
sure.
Once I ran out of my warm market, I was going into the cold market. So now I had to start cold calling and chasing after people to save money, to save their own money, and all at the same time, they're thinking, oh my God, this guy's a salesman. He wants me to give my money up to him or something like that, whereas it's their own money. It's not I'm not taking it away from you. I'm putting it in a safe place. So usually I would
Yeah.
sell them a life insurance policy, okay, as part of what I did, and they would think I'm taking that money away from them, even though it's for their own savings. So that became very tedious, so I hated it, and I kind of got out of that market. So I totally understand what you're
Sure.
going through, or you went through, rather. What kind of portfolio did you build? Did you do fix and flips? Did you mainly only do rentals? What kind of, how did you build your portfolio, let's say?
Yeah. Yeah. So when you get the book and you read it, what you're going to find is for the first 5 or 6 years, we bought what we knew, and what we knew was 3-bedroom, 2-bath homes, 12 to 1,500 square feet on a quarter acre, right?
Mhm.
We didn't know any different. So that's all we bought. The problem with that strategy for us is when we get to 2006 or 7, the market is so crazy, crazy hot, again, kind of like it is today. And we couldn't buy the 9th house. And, the first house we bought for 107 was suddenly selling for 265, but the rent didn't change, right? So if you know anything about cash flow, it can cash flow at 107, but it doesn't cash flow when it goes up 150%. So I couldn't convince myself to buy 9th house. I couldn't beat up my Excel spreadsheet enough to make it a rational decision. So what we did in right around 2007 is we did some 1031 exchanges. We moved all of the equity out of houses into small apartment buildings, small being as small as 5 units, up to 18 units. So we went from 8 to 80 units in about a 13-month period. Then the crash happens. We have no houses, and we're like, yay, we survived. Because our cash flow went up. Sure, our net worth took a hit when everybody's did, but you don't spend net worth. So we survived the downturn fine. Then it gets crazy in 2011, 12 with prices. We start buying. Unfortunately, we went to a bank first, and the bank told us no. Right? We had 800 credit scores, both of us, 7-figure net worth and 6-figure incomes, but the bank said no. And I actually went to 2 banks. I'm like, how can this possibly be? Well, the lending environment changed. And if you're in the market today, it's the same deal. Lending changed overnight. I know people that are taking hard and private money that disappeared. That's what happens. And it happened to us. So what we did is we ended up going to hard money first, which meant you had to have 40% down of purchase price, paying 12 points or 12% interest in 3 points. But we could buy more.
Wait,
and
I'm sorry.
More and more people.
I'm sorry, Mike. I just have to touch on it. Back then, you had to have 40% down?
With the hard money lender back in 2012, yes. Of purchase price, yes.
Wow. That's just a huge jump from what newbies are seeing now at 10%. And then people are complaining that the LTV is more. So now you have to come up with 15 or 20%. So I just wanted to, I'm sorry to stop your thunder with that. But
no, you should. This is for you.
Please
stop me.
Anyone that's listening.
Please stop anytime. This is for your audience. So I know a lot of investors who are running hot and heavy the last 2 years that tried to get the next deal done. And they're like, oh my God, they want me to put 25% down and they want me to escrow 6 months of interest. What are they doing? I'm like, my God, it's their money. They get to make the rules, people, right? You can sit and complain, or you could go get a better deal. So the world changes, and it changed for us back then. And then what we did is we kept talking about what we're doing, and more people were coming to us. So we started doing private money, paying 10% interest only, which is just cheaper, no points, cheaper. And we just kept going and going. And, we went from 80 to 150, and then the market turns. And what we did most recently, because everybody was coming in as a new investor, is we got out again. All of you were chasing multifamily. So what did we do? Well, we took assets that we thought were overvalued and we sold them. So I'm sitting here today with a big pile of cash because, you all were overpaying for apartments, and I'll take advantage of the next situation, which will either be in multifamily or in single family homes. And the cycle repeats, right? New investors come rushing in at the last moment. And that's usually when I'm getting out of the way. And that's kind of what just happened now, right? I got out of the way in the last 9 months, and all this is documented on my YouTube channel, One Rental at a Time. I do original content every single day. and I tell you what I'm doing. So you can go back and listen to the episodes where I said, oh, just sold another apartment. Oh, just sold another apartment. So it's fun to do.
Absolutely. Love hearing you talk. Let's talk about the current market, as you were already alluding to, right? A lot of newbies are coming in now, kind of at the wrong time, but also it's a great time as well, right? Because markets are going to change. Things are right now very expensive. It kind of hit that bubble because of this virus, and now it's kind of going to go back down. So what do you see in the next, let's say, few months to a year? What do you see the trend going towards?
And why?
Yeah. So if you're
yes, of course.
Yep. So if you're coming in today, it's actually a great time, because I have made the majority of my net worth, legacy wealth, whatever you want to call it, at a time of transition. We are in a time of transition today. The people I feel a little bit bad for, the people that started in the last 2 years, they got into a couple of deals and now they're kind of stuck, right? If you're a newbie investor today and you've yet to commit capital, you are about to step into what would be a tremendous market opportunity, because you have the ability to spend the next 60 days learning. All you need to be doing from March till May is learn. Don't you dare commit a freaking dollar to a deal, because we don't know where this thing's going, right? Are we going to go into Great Depression number 2? Maybe. Are we going to just springboard back if everybody gets a bunch of checks? Maybe. Your job today, if you want to get into real estate investing, which everybody should, because the paper market, the stock market is rigged. It happened to me in 02, 03. It's happening today to people. It's rigged. It's a casino. You don't get it. I don't get it. What is safe is not safe. Figure it out. So real estate is going to be a hard asset. We are going to throw a lot of money at people. And when inflation hits, you are going to want to own hard assets that are indexed for inflation with rent and appreciation. It's the only thing that's going to work. Paper assets will not work. The dollar will not work. Cash will not work. The economy of you two, right? I'm 20 or 30 years older than you two. You're going to have inflation in your lifetime. I'm almost 50 and I really haven't seen inflation except when I was a kid. Before I was a teenager, when Jimmy Carter was around, it spun up. But you're going to feel it, and you're going to probably feel it in the next presidential cycle. It's going to be 4 or 5 years out there. The piper is going to come up. So if you're going to get in now, the best thing to do, in my opinion, is to get single family homes bought below the median. Get as much 30-year fixed rate debt with a 3 or a 4 on it. And I promise you, if it's conservatively financed, cash flows today, you are going to be thanking me in 4 or 5 years when your interest rate is 4 and inflation is 4. Basically, you have 0% interest, and it's going to be a great time. So again, if you're a new investor, what I teach all my students is you got to learn your market. You just need to do what I did. I chose a market, Fresno, California, that I'd never been to. But you know what? I looked at it every day for 10 years. Sorry. I looked at it every day for 10 years. Now I know the market. I know it better than 99% of the agents, and I still don't live there. So if you're willing to do the homework, and again, we all have to stay home now. So this is like the best freaking time. Spend 2 months picking a market, learning an asset type, and going. Don't get distracted with the real estate shiny objects. Don't do Airbnb. Don't do Burr. Don't do all these other things. Pick your lane and stay in your goddamn lane, and go buy some cheap, conservatively financed assets, because there are going to be deals to be made from over-leveraged people who overpaid. And it's going to turn out okay. And if you're starting now, it probably turns out really good. But you got to get in to win, right? You're not going to benefit from hard assets if you don't own any hard assets.
That's true. Love the advice. I love the advice. How do people find you? Social media, what vehicles are you on? I know
I'm an old guy, so I do one vehicle, right? So I choose to do daily, like everyday original content on my YouTube channel. It is called One Rental at a Time. If you want to check me out, obviously there's the book that's available on Amazon. And yes, it is even available on Audible now. It is called One Rental at a Time. If you do pick it up, do me a favor. I do so much for free. Please leave me a 5-star review and say great book or something like that. It really helps all these silly algorithms. So I shout out to the people that do that. And that's it. I do have an Instagram page that someone else updates, but for me, it's all about you. I do have a small set of students that follow me or follow my course, which is called How to Start One Rental at a Time. Really, follow me for free. It's on YouTube.
I'll definitely join and follow you on YouTube, personally, and also our.
Yeah, definitely.
Thank you.
Do you have any questions, John?
I know you're saying to hold on to cash and everything like that, but in your opinion, if you were to start out right now, besides the learning, what do you predict being like one of the best assets to purchase in the next few months to a year, and why?
So, the great thing about me is I'm still active. So I bought a 2-bedroom, 1-bath house to Monday, right? What is today? Thursday? I bought it Monday. I bought it in my market. I paid 98 grand. I'm going to spend somewhere between 15 and 18 grand repairing it. Then I'm going to rent it out for $1,100. So I do what I say, right? I'm a buy and hold guy. Today, when I do my numbers, because everything I teach, I can get a better return in single family homes. And especially because what's going to happen, here's the deal. Sellers who don't have to sell are going to take their house off the market. But here's the rub. Buyers are going to disappear. All investment buyers are scared. Owner-occupant buyers are scared. And again, when did I make most of my wealth? 2010. Why? Because buyers were scared. You will see in the next 60 days in your MLS, Realtor, Zillow, whatever, capital letters that says must sell. Any offer accepted. They'll be there. I promise you, it's coming. I've already seen one in my market, which I hadn't seen since 2012. It's coming. There will be motivated sellers that have to sell. And if I'm the only one in the market with maybe 5 or 6 other people that are still buying, you can create good or great deals. But you have to learn your market. Don't rush in, but do something. Pick an asset, pick a zip code, learn it, and then commit. Because I think the best asset to own in this current market cycle is going to be single family homes. 3, 4, 5 years from now, when all these multifamily deals blow up, I'm going to do what I did in the book. I'm going to sell my houses and I'm going to take the equity and put it in apartments. So I'm going to buy 20 or 40 houses this year because in 3 years, my houses will be worth more. I will then 1031 exchange that equity into apartments. And instead of going from 8 to 80, I'll go from 40 to 400. And, it's kind of rinse and repeat. So read the book, see what I did, because it's amazing how much it repeats itself. I think the best investment is houses today. I think multifamily will have its day, but it's 3 or 4 years down the line. So why wait? So I'm going to do houses today.
That's awesome. That's really good advice. It's totally different than what most people have been saying. A lot of people.
Yes, you will see that about me.
Yeah. A lot of people are saying do multifamily, but there's so many people that are buying multifamily right now.
Multifamily is going to blow up spectacularly. These GPs and LPs are going to need money. They're going to have calls the capitals, the lending. They're going to fall below their debt service. These people buying skinny deals are going to learn that they weren't conservative and they were following Grant Cardone right off the cliff. Bigger is not always better. All you got to do is do the goddamn math, right? The math says a single family home gives you a better return. Why are you enamored saying you own 100 units when you lose your ass? I'd rather say I own one cash flowing house. I don't get it. But some people want to front on social media and say they own 100 or 1,000 or whatever it is. Great. Well, let me know when you go bankrupt and, we'll go pick them up later.
And that's how I started. I started with one single family rental. That was my first house back in 2000.
There you go.
No, it's just funny. So then I guess, okay, for example, myself, I have 12 units. Of those, that's 6 houses.
Congrats.
One of them, thank you. One of them is a single family Airbnb in Lake Hopatcong. Would you recommend those that have multi for, like all that gets even worse or whatnot with the coronavirus to list them and try to sell them? Because I have a lot of equity in all.
Well, I don't know if you can, right? You may have missed the boat. You could list it. It doesn't hurt, right? Be aware the market fundamentally changed 10 days ago. Now, I don't know your market from Adam. There could be lots of people fishing there. I have no idea. But just realize, even if you list it today and you get an offer, you're 30 days away from a close, and a lot of bad shit's going to happen in the next 30 days. But yeah, I would be raising cash. Again, I sell what I think is overpriced. I know my market that well. I know the income. I know what the cap rate should be. And when the cap rates get compressed beyond what I think is reasonable, I sell. I don't fight it. Pigs get slaughtered, right? A bull wins, bear wins, pigs get slaughtered. And I'm going to take my chips and walk away when my chip stack's big enough. I don't wait because some talking head on TV and Grant Cardone calls me stupid. Oh, you're an idiot if you buy a house. Well, forget you. My returns are better in a house. I don't have Grant or Capital, whatever it's called, Cardone Capital, millions of dollars I have to place. I don't have 100 employees. I don't have partners. It's just my stuff. So if my decision is a house is better, I feel okay buying a house. Thank you very much, Grant.
Makes sense.
I want to thank you very much, Michael, jumping on with us so quickly. And, you know, best of luck. And hopefully, you know, we stay in touch, right? Yeah, I want to thank everybody for watching. Great day.
Yeah, thanks, Mike. Take care, everyone.